When I first approached trading, I thought success was luck. I imagined that the right chart, the perfect entry, or a fleeting market opportunity would change everything. For a while, that belief seemed plausible. Wins came, sometimes unexpectedly, and I felt invincible. I told myself, this is skill, when much of it was randomness wearing the mask of certainty. But luck is fleeting. It rewards indiscretion as easily as it punishes discipline. Over time, I realized the market doesn't care about stories, wishes, or clever tricks. It only responds to reality, to structure, consistency, and discipline. That realization was uncomfortable, but necessary. Discipline is the bridge between skill and survival. It's what separates traders who stumble once and recover from traders who stumble once and never return. Luck might give you a few victories, but it cannot protect you from the consequences of repeated mistakes, emotional reactions, or uncontrolled risk. I've watched countless traders chase quick wins, believing in patterns that only existed in hindsight. I've seen accounts grow only to collapse under the weight of impulsive decisions. Discipline is not glamorous. It doesn't come with adrenaline or excitement. It is patient, quiet, and relentless. It is the hidden engine behind every sustainable trader's success. Understanding discipline is not about moralizing or turning trading into a rigid ritual for its own sake. It is about creating the conditions where the best version of yourself shows up consistently, regardless of fear, hope, or temporary market euphoria. That is the path where luck becomes irrelevant. Discipline begins long before you enter a trade. It starts with the recognition that trading is probabilistic. You will not win every time. You will not be right every time. Discipline is accepting that reality without letting emotion hijack your decisions. The first layer is rules that protect you from yourself. These are not suggestions or aspirational ideals, they are contracts with your future self. Acceptable loss per trade, daily maximum drawdown, and weekly exposure limits are the foundation. Write them down, make them immovable. Your emotions will always try to push you beyond these boundaries, and without pre-established rules, you are vulnerable. Next comes ritual and repetition. Discipline is easier when your mind does not have to negotiate constantly. Before each trade, I perform the same sequence: review open positions, check my emotional state, and silently confirm my reasoning. If I feel restless, impulsive, or defensive, the ritual tells me to pause. That pause is invaluable. Acting while unsettled is the fastest path to mistakes. Journaling is another pillar of discipline. Many traders focus solely on profit and loss. That is short-sighted. The real insight comes from recording your emotional state, the reasoning behind each trade, and the small impulses that whispered, "Just do it," or "Maybe it will work." Over time, you begin to notice patterns: stress from a personal situation that increases risk-taking, tiredness that reduces patience, or even subtle environmental factors like noise or interruptions that shift your focus. Understanding these patterns lets you avoid unnecessary risk. Visualization is often underestimated. Discipline is not just mental control, it is also preparing your body for the inevitable shocks of the market. I rehearse trades moving against me, imagine the tension in my chest, and practice following the plan regardless of fear or frustration. When real trades mirror these rehearsals, my body behaves according to training, not impulse. This is the muscle memory of discipline. Simplicity is critical. Complexity masks uncertainty. Every additional indicator, overlay, or rule creates points of negotiation when stress rises. If you can explain your entry, exit, and rationale in a single sentence, you have procedural simplicity.
Simplicity is not laziness, it is a tool that reduces internal debate, lowers emotional exposure, and makes decision-making predictable. Psychological capital is finite. Every trader has a balance sheet of attention, patience, and focus. These resources are depleted by stress, fatigue, and emotional turmoil. When they run low, discipline becomes expensive. Protect your mental capital by limiting session length, avoiding forced trades, and taking breaks before fatigue compromises your judgment. Treat your focus as seriously as you treat your account balance. Finally, accountability accelerates discipline. Share sanitized logs of your trades with someone who understands the craft. Discuss choices, not results. Accountability strips away rationalizations and exposes patterns of deviation from rules. It's one thing to know your weaknesses privately and another to confront them openly in a space where excuses are unacceptable.
Discipline is inseparable from emotional control. Traders often imagine discipline as a static external rule set. In reality, it is a dynamic negotiation between your plan and your impulses. Emotions are unavoidable, but letting them dictate action is optional. There will be days when stopping is the only correct decision. Fatigue, external stress, or a restless mind are not weaknesses, they are signals. Ignoring them in pursuit of action is reckless. True discipline recognizes these moments as opportunities to protect both your account and your psychology. The market will not disappear. Your clarity is irreplaceable. Drawdowns test discipline more than any winning streak. The trader who survives is not the one who avoids losses entirely, but the one who responds with calm analysis instead of reflexive action. A disciplined trader treats drawdowns as data points, not indictments. They ask, what does this reveal about my process? Where did I deviate? What adjustments are necessary? Emotional responses like revenge trading, doubling down, or chasing losses are the antithesis of discipline. Daily review is a simple but powerful discipline. Take 5 minutes at the end of the day to write one line about what went well and one about what went poorly. Not P&L, but behavior. Did you follow your rules? Did you act because of noise or process? Over weeks, this exposes patterns of drift and provides opportunities to recalibrate. Mindset techniques like affirmations or mantras are useful only when paired with behavioral scaffolding. The structure gives insight a pathway into action. Breathing exercises at stops, rehearsed responses to losses, and pre-trade checks are examples of connecting psychology to execution. Without this bridge, insight remains decoration, not functional skill. The temptation to make it back after a loss is biologically hardwired. Immediate correction feels satisfying, but it undermines long-term success. Discipline requires measured responses, reduce position size, tighten selection, and rebuild gradually. Escalating size in pursuit of lost gains is following emotion, not strategy. True discipline waits, observes, and acts only when probability and process align. Restraint carries dignity. I have observed traders who survived storms not because of spectacular trades, but because of relentless consistency. They chose the same way every day, building incremental advantage through repetition. Discipline is quiet accumulation. Luck is loud, fleeting, and unpredictable. Discipline is steady, invisible, and compounding. Complexity often masquerades as skill. Traders chase new indicators, patterns, or strategies, thinking each will provide the edge they lack. Discipline is discerning whether a change reduces cognitive load or adds it. The right adjustment simplifies decisions, clarifies action, and protects against impulse. Misguided complexity invites chaos when stress rises. Finally, the market does not hurry, and neither should you. Discipline thrives over time in repeated, deliberate choices. Quick validation, sudden wins, or moments of perceived genius are unreliable markers. True advantage grows silently,
through patience, reflection, and unwavering adherence to a process that prioritizes long-term survival over immediate gratification.
Discipline is not something you suddenly acquire. It is something you practice long enough that it begins to operate without effort. Over time, disciplined behavior stops feeling restrictive and starts feeling natural. You no longer fight impulses, you simply don't entertain them. The traders who last are not emotionally stronger or intellectually superior, they're structurally protected. Their routines catch mistakes early. Their limits prevent damage before it escalates. Their discipline acts long before emotion has the chance to speak loudly. Luck creates moments. Discipline creates continuity. One can lift an account briefly, the other sustains it through years of uncertainty. When volatility rises, discipline doesn't disappear, it becomes more visible. It shows up in smaller size, fewer trades, and clearer decisions when others feel pressured to act. Over time, discipline reshapes how the market feels. Price movement no longer provokes urgency. Missed trades stop feeling personal. Losses stop demanding reaction. The market becomes information, not a test of identity or confidence. This is where consistency is born, not from perfect entries, not from clever analysis, but from behavior that remains stable regardless of outcome. Discipline turns trading into a process you can repeat, refine, and trust. And when luck inevitably fades, because it always does, discipline remains, quiet, unimpressed, working in your favor trade after trade, long after emotion has exhausted itself.